Hi traders, it's Nick here and I'm happy that you found our free workshop on July the 18th. And as you can read right above, I will give you my 3-step formula for multiplying profits and decreasing risk in all financial markets. Not only the Forex market or stock market, you can use it wherever. I also like to trade it on metals like gold, whatever you like, okay? So I will also explain and show you in this video why it's so important that you have to use this formula, and in order to do so, to explain it so you can actually understand what I mean, I will give you some examples using my charts.
Okay, so what you see here is a simple chart. This is the GBP JPY historical chart. It doesn't matter, as I said before, what you trade. Important is that you apply the formula on all charts, and it doesn't even matter what kind of system you're trading. Of course, I like to trade my own, but that's a different story. So what do you see here? It's a 700 pips move up on this chart. The price moves up 700 pips, okay? Then what happens? It's taking a breather. Price retraces about 400 pips. After that, you see the price trending 900 pips up, retracing again 500 pips down. So especially this is an example for swing traders and position traders. So especially for those guys, when we find entries, right, and we have rules for entries, of course, for longs, for shorts, for exits, for everything. That's not for right now, but you get the point. So you imagine you are in this trade which moves up about 700 points, okay? And of course, yes, you take incremental profits, but we always try to leave a position running to maximize profits anyway. So we want to ride a trend as long as possible. But as you probably already know, a trend does not just move up forever. It will always, as I said before, take a breather, retrace, and if it's a really powerful trend, it will move up again, okay, like in this example. But down here where you see the yellow arrow and the price moves down 400 pips in this example, and you are long from somewhere here, theoretically making already 700 pips with your remaining part of the trade, right? When the price retraces, you theoretically give it back. You give back about 400 pips in this example. And that's when traders usually start sweating. Yeah, that's when the emotional thunderstorm begins here, right? Greed, fear. Should I move? Should I close my position? Should I move away from my rules? What should I do? Most traders don't know how to react, and what they do, they come out maybe too quickly, and in the end, even after the 400 pips down move, price decides to trend another 900 pips in this example, but you are not in anymore, or you have to look for new entries or whatever. So again, this is the part where the 3-step formula has to be used, okay? Why? Because what we do, we have rules to hedge up a position and take advantage of these retracements, meaning you keep your longs, but you also trade the shorts, milk the market on the retracement. That removes stress, fear, everything, and that's exactly what I'm going to teach you in our free workshop. So you can see again, price moves up 900 pips. What happens here? It moves down 500 pips again. So at this point, again, most traders start really getting itchy fingers. They want to get out of the trade. They just see price is not moving higher. They start doing mistakes, and that is something you cannot afford to do, especially if you want to trade for many years and you want to grow your account, okay? And guess what? I do that, and many of my students do that also, and colleagues, fund managers. They will not go crazy just because the market is retracing. They don't know if the market will retrace or maybe crash, go against them, and then they give all the profits back. No. So what you do, you apply the 3-step formula to milk the markets on the pullbacks as well. Also, of course, on the continuation of the existing powerful trend. Okay. Again, as I said, that's something we are going to do step by step in the live event. And if you're located in the USA and you think that's not for you because your broker does not allow you to hedge, don't worry about it. There are ways to do that. It's very simple, doesn't cost anything, and it's legal. Don't worry about it. And I will explain to you how that works, right? So again, I hope you understand why you can't afford to miss out on this as a trader. So just make sure, please, that you enter your first name and your email below the video to reserve your seat for Friday, July the 18th. I'll catch up with you very, very soon. Also, not to forget, after about 2 hours after the live session, you will receive my simple 3-step formula blueprint in PDF format, okay? Plus the recording of the live session. I'll catch up with you soon. Happy and healthy trading.